Hi, ladies and gentlemen, and thanks for joining me for another edition of Behind the Business. I'm your host, Robere Kazadi. Today, I have a very interesting guest. His name is Rob Burden from Paramount Property Tax Appeal. And he he's in the real estate space for sure, but a different approach, a different niche. And I'm so excited to have him here and to learn more about what their company does and about this whole world of property tax appeals. So, Rob, thanks for being here. I appreciate you. You look great.
Thank you. I appreciate it. I got all dressed up for you. I made the long trek. It's a beautiful California morning, and I put on a jacket for you. So I appreciate
Well,
it.
we feel privileged that you put on the jacket. So thank you. All right, Rob, let's jump into this here. I can't wait to hear your story. So you went from PricewaterhouseCoopers
Yep.
to a manufacturing company to property tax appeal. Now, that's a heck of a journey. How did that really happen for you?
That's a great story. And I think that everybody, and you'll see when we get into this, everybody has a story about how they ended up in property tax bill, and it's all different. Really, as you said, I started my career right out of college at PricewaterhouseCoopers. I had an office on the corner overlooking downtown San Diego. It was really cool, and I got tired of being in public accounting. Pricewater being in public accounting is a great place to be from, and I make a joke about that. But I learned my learning curve was so high, and I learned so many things at such a young age. And I worked with some of the most intelligent people I've ever met in all of my life. And it was a great place to be from, but it was just time for me to move on. And I left and I went to work for one of my clients, a large manufacturing company. We had operations in 4 to 5 countries at one point in time in the world. And I got to travel the world. And again, got to be exposed to just a awesome number of things, but I got tired of being a bean counter and closing the books every day. And I just had become rote, and I was looking for something different. And to make a long story short, I got into financial sales. I got into financial sales because I had been dealing with selling to the C level, for lack of a better term. That's very cliche. But the people that I had learned to deal with from the time I got out of college through my time at the manufacturing company, I was dealing COOs, CFOs, CEOs. That was my mark. And I have done a lot of financial sales. And then I got into real estate. I got into real estate, and being in California, it was a great time to be in real estate. So I learned the real estate world as I went along. I spent 7 years doing real estate full time. I was a commercial loan broker. Anyway, long story short, the market had drifted and did some things in the late 2008s, 2009s, and I did a number of things. And long story short, I got introduced to, through a mutual friend, the founder of our company, Wes Nichols, who was also out of the real estate world and was looking for someone from a business development background who could talk to the CFOs and COOs and help him move the company from what was a very small stage at that point in time to where we are today. I think we were discussing this last time that we've grown probably 8 to 9 times from where I started. And we're probably the second largest tax appeal company in California now. We're very
Wow.
proud of that. He called me and said, you ever thought about going into property tax appeal? And I said, I don't even need to deal what property tax appeal is.
Yeah,
and
like most people, right?
Yeah, I said, just like you. And he said, I can teach you. And I said, okay, you'll teach me. I thought it was a great opportunity. It was a niche, much when you and I initially talked. He explained what property tax appeal is, how it can be a very fruitful business for us, and how we go about doing it. And we like the results every day of what we do. And to be honest with you, I enjoy being a taxpayer advocate. I like coming in every day and knowing that I'm helping my clients pay the correct or least amount of tax that they should be paying. I don't want them overcharged. We want to make sure that when my clients sleep at night, they go, you know what? I'm paying the right amount of property taxes. And that's important, and that makes me feel good on a regular basis.
So I guess it's fair to say that you fell in love with this specific niche of property
Mhm.
tax appeal because you get the opportunity to help people out. Is that it? Is it just it makes you feel good inside and so it's fulfilling? Or is it the money? Or I mean, where are we at? The autonomy? Or what was it that made you really
It's
fall in love with this niche?
It's a great question. And I don't know that there's one individual thing. I'm a big sports fan. And if you grew up in your area, if ever Jim Rome, big sportscaster. And Jim Rome had a saying is that the scoreboard never lies. And in this business, whether you make money or don't, scoreboard never lies. We've been very lucky. We make a lot of money, and that's very good. And I do enjoy that part. I've been here for 13 years. And when you combine that with helping our clients, it's a twofold thing that I know that the government is not overcharging my clients, and we're making a lot of money along the way. So every day when I get up, I feel fulfilled because I help people. And secondly, we're pretty successful doing it right now. I'm not going to complain about that. Not apologize for it either.
Awesome. Okay, so let's say that you're at a dinner party and you meet a new guy or a couple of people, whatever, and they say, "Oh, what do you do? What do you do?" How do you explain? And again, you've already touched on it. Okay, the title of your company is Paramount Property Tax Appeal. So it's fairly clear what you do. But if you were to explain this to some folks at a dinner party, real casual, but giving them enough information to where they might want to do business with your company later, what would you say?
That's a great question, and one I answer so many times that I could almost do it in my sleep. And really, what I do is I explain it like this. And I use 2008, or you could pick any time, a rough time in financial history. And I just tell them if you bought a house in 2000, late 2007 or 2008, it doesn't matter, and you paid $500,000 for it, that's the amount that the county assessor is going to calculate your property taxes off of, so $500,000, because that was what you paid for an arm's length transaction, that type of thing. But if we looked at the value of that house in 2009, we all know that the property tax values, or excuse me, property values had fallen through the floor. That property might have been worth 300,000, 350,000. The number's irrelevant. The county assessor still calculating your taxes on a fair market value of $500,000. Where they're calculating the property taxes on a fair market value, they shouldn't be at 500,000, they should be at 300,000. And so what we do is we come in and we do a valuation case on your property, and we take that to the assessor and we say, "Hey, look, the value of this property isn't 500,000, it's 300,000. And that's what we should be calculating your property taxes on." And everybody goes, "Oh yeah, I get that now, right? It's based on the fair market value." And when that fair market value falls because of macroeconomic factors, that we could go in and say we shouldn't be paying property taxes on that old value. We should be paying property taxes on that new lower value. And I'm the expert that comes in and I build the valuation. I argue with the assessor. And if need be, I go and I put on a hearing in front of the assessment appeals board. So really, we follow the fair market value. And that kind of touches home to everybody because they get that and they feel that, oh, hey, if the value of my house goes down, I shouldn't be paying property taxes on a higher amount. I should be paying property taxes on a lower amount. Or I use the example of for new construction, we all know that if you put a pool in your backyard, you spend $100,000 on putting a pool in your backyard. Does it add $100,000 of value to your house? No. What does it add? 60,000? We could argue about that. Maybe 60,000. So the assessor will reassess you for the improvements that you put in. If the assessor says, "Hey, how much did you spend on the pool?" and you spent $100,000, and the assessor says adds $100,000 of value to your property, that's not right because that's not the value. And everybody I said they should probably only put 60,000 on there, or 50,000, or whatever the number might be. And and everybody kind of goes, "Oh yeah, I get that." So basically, we're looking at the fair market value either through new construction or sale or drop in the market, and everybody gets that. And what we do is we do very little single family residence. We do very large multifamily, office, industrial space. And as you get from a single family residence to these larger buildings, the issues get multiplied. So there's a lot more gray area in there. But if you just think about that on your house, it rings true for everybody because everybody understands their house value.
So not only when you have property values that are on the decline because of economic situations in our country or whatever, and it doesn't have to be just single family homes, it can be commercial and industrial. But so those people definitely want to not overpay their taxes. But you're saying that at times when the value of your property goes up, the tax assessor will over assess. And that's an issue as well that wants to be addressed. And that's what you guys do. Is that right?
That's a good analogy for it. Every state is a little different. I'm from California, and we're West Coast centric. And California has, for anybody here who's from California, we're governed by Prop 13, and that's a whole set of different rules that's probably outside of the scope of today. But if you're in a market like Texas, Texas reassesses the value of every single property in Texas every year. So they have to adjust the value of that. And then so property taxes, as a general rule for the last number of years, have been going up. If the assessor comes through and in Texas and he overassesses the value of your property for whatever reason, could be because they're using market rents and there could be something wrong with your property or you're having trouble renting it, or any number of reasons, we'll come in and say, okay, you assessed it at X and it should be at X. So yes, if the assessor, anytime the assessor has the value of your property greater than the fair market value, you should appeal immediately.
I live in Boise, Idaho, and in Idaho, we pay very low property tax, but we also pay state income tax. Whereas I have friends in Texas and they pay no state income tax, but their property tax is amazing. It's through the roof. I don't even know how these people are doing it. How does that factor into what you're doing?
It factors in from a perspective of in Texas to give people some context, depending upon where you are, in which county you are in Texas, the rates can be 3% of your value. A lot of times it's up around 2.5% to 3%. I've seen them actually as high as 3.25% of the value of your property. That's a really big number. And it changes as values go up. If you bought a house in Texas, my sister lives outside of Houston. I bought a house 20 years ago and she was paying X in property taxes, and it's almost tripled since that point in time. So how it affects what we do is it doesn't affect what we do because we only deal with the assessed value, not the tax rate. That's a tax collector issue. I don't work with the tax rate, but it increases the urgency. It increases the urgency to make sure that people look at the value of their property on a yearly basis. Because if you have a rental property, just a rental house, or if you have an office space or you own a multifamily property, odds are that the property taxes are one of your biggest expense line items. At a 3% tax rate, the urgency to control that number and knock that down as far as possible has to go to the top of any property owner's list. So it really creates an urgency for it.
Awesome. Listen, let's transition a little bit. I want to talk about AI and how you guys are using it. So, where is AI actually making your job easier on a day-to-day basis?
It's a great question. To give you a little context to that answer, last year we filed about 5,000 individual appeals with an assessed value of right about $50 billion. And for 2026, our estimates are somewhere we're going to file between 62 and 6,400 appeals, probably with an assessed value of close to $65 billion. That is, yeah, that's an unbelievable number of appeals. Yeah, it is. And so really what we do, and I touched on it a little bit earlier, I said we build a valuation case. We build a valuation case and it looks like an appraisal that a bank appraiser would do. The bank hires an appraiser to go out appraise your house or your building. For purpose of that, it's a big thick document and there's a lot of information in there. When I started 13 years ago, we used to have to do all of those by hand. And
Wow.
the task associated with doing 5,000 appeals by hand is daunting. It really is. So, where we've used AI on a daily basis is building AI that can go out and scrape all of this publicly available data, whether it's from CoStar or whether it's from the county assessors or whether it's from Parcel Quest or whatever data source that we might be able to use, we're able to scrape that and pull all of that data, comparable sales, cap rates, market rents, all of the data that we use, and we can take that data and aggregate it and drop it into a valuation. So whereas we were having to go out and examine what are five comparable sales and we had to find them and then manually put them into our pitch deck, we've got AI pulling that information, dropping it into our pitch deck being our valuation, and it's 85% done for us. So whereas our valuators were doing 1 to 2 cases a day, their number has gone up to, I don't know if it's, I would have to go on and look at it, but our ability, excuse me, the number of cases that we have to get out on a daily basis has gone up, and we use AI as we're still learning. We're like everybody else. If you look at how far AI has come from this time last year, we're still learning and we're still refining it, but we use it on a daily basis to just help us build better valuations because we have more data to look at and we can build them faster.
What's your win rate?
Our win rate on cases that we decide to take to board, that we decide to go forward with, is about 80, depending upon the year, is somewhere between 86 and 88%.
Wow.
And now I need to give you a little context on that. There are some properties we just can't help, and we look at them and we decide we're going to move on. We can look at them up front and say, hey, there's nothing here. But on cases where we say the assessor has clearly, in our opinion, overassessed the value of your property, and we move forward with it, yeah, it's like 86 to 88%.
How many people work over there at Paramount?
At last count, we have 38. We just hired 2 more to do 5,000 appeals a year. There's 38 of us. We're headquartered in San Diego. We have a lot of people that work remotely because this is such a kind of a unique thing, finding somebody that understands how to build valuations and put on cases. Very few people like that. So we have people across the state. We have somebody in Texas and we have somebody in Colorado. So yeah, and then we also make use of, we have a very large number of virtual assistants that we use for overseas for repetitive tasks that we have to use. We also have, I think at last count, 17 VAs who have taken the repetitive tasks associated with things like calling the counties to follow up on refunds. That's not something I should be doing. That's something that we can have somebody do. So we have a whole team of people overseas who have taken off a lot of that stuff. So we're using AI along with a lot of other tools to be more efficient in what we do.
Great. You've touched a little bit on how AI is making your life a little bit different or better. Tell me, what's one of the coolest things that AI is able to do to make your client's life better right now?
How long do you have in the No, it's fair. AI, as we use it, I see all of my clients and we talk to our clients about how they're using it, what they're doing, and everybody has a different story. But how we can use it and how that reflects to my clients. I had a client or customer, a new client come in and he said, Rob, I've got 128 properties and I'm interested in what you think. He said, some I've owned for a long time, some I haven't owned for that long. He said, I'm interested in what you think about what we can do from a property tax perspective. Now, as part of the AI scene, we've actually built a valuation tool that we can use. I'm not a valuator. I'm a business development guy. I'm a CPA. I understand how to put a valuation together. I can do it. But we've built a tool where we can drop the APN, the address into our valuation model, and it will spit out for property tax purposes, which is different in a lot of cases than a bank appraiser might do. we can spit out a valuation in a span of 5 seconds. It pulls all the data. And so I
Wow.
was able to take his list, import his list into our valuation model. It dropped everything back out into a spreadsheet. We had one big summary sheet, and then each individual property had its own quick and dirty, if you will, valuation. And I looked down and said, the property tax value of your this property number 10 is $1 million. And then we showed the assessed value of eight or for $1.5 million. And then that would show a $500,000 over assessment. And so we
Right.
can share that with people and show them very quickly whether we think there's a case or not. And that becomes a very valuable tool because if people are like, okay, then I want to move on. Now I have some certainty that, if I go through this process, and the process is super easy for clients, it doesn't add much to their plate, but they get some certainty to see, okay, I really believe there's a reduction here. Let's move forward with this.
Okay.
That's the quickest way to do it. And the
I got a
thing
quick
is,
question.
go
Go
ahead. No,
ahead. Go
that's
ahead. Go ahead. Go ahead.
and also we talk about public data in this database. There's a lot of off-market transactions that happen that a lot of the data, cap rates, that type of thing, aren't in the public domain. Now, obviously, because we have access to a lot of information and a lot of appeals and what have you, we've taken all of that data that we have and we've aggregated that as part of our AI. So we're actually able to find some additional off market data that we can use that is much more valuable to our clients. So if we can come up with some off market data that's verifiable by the assessor that we can use in our cases, that gives us another arrow in our quiver in our arguments with the assessor. When we talk about how do we have an 86 to 88% success rate, that's because we have all of this additional data.
So I'm wondering, how do you guys structure this? Do you work on a contingency basis? Is it once you show this guy that he's being overassessed $500,000 and you can advocate for him and get that lowered? Do you just charge a flat fee? Is it a percentage of what you save them? How do you guys structure your fees?
Good question. And essentially 95% of our business is done on a contingency basis. And it's basically on the amount of the refund that I get you back. Just to use an example, is if I get you a $10,000 refund, because in especially in California, it comes in the form of a refund. Texas or other states, it's a lower bill. But essentially, when the property taxes is lowered either through a refund or a reduced bill, when that at the moment that happens, you get the money back. Reduced bill comes in. I send you a bill for 33%, which is generally about a third.
I see. Okay. Okay. That
The
makes
one
sense.
thing that I will bring up just real quickly, and I said 95%, oftentimes, especially with our large developer clients, you've got dirt and you're going to build multifamily. That's the big thing to build in California now is multifamily. And always a component of it has to be affordable housing. A lot of our clients will look down and say, I have no idea how they're going to value this property when I get done. And therefore, I have no idea how to underwrite this project for my property taxes. And they'll pay us to come in and say, put together a a projection of what their property taxes will be at the end of the project when they go from dirt to handing out keys. And so we'll come in and we do work on a contingency basis, on an hourly basis for that. And that's project based, and we set up some parameters for them, and we have a list of deliverables. And I run a lot of those projects only because I come out of public accounting and I understand the hourly world and type of thing. So
Right.
95% of our business contingency, or 5% hourly or project based.
Okay. Cool. That's very cool. Now, be honest with me and tell me where AI has been a headache. It's not making your world better. What's happening?
Can't get it to work. One of the things we're still living in the Wild West. If you were around long enough back in the late 1990s and early 2000s in the dot-com bubble was the Wild West. And everything was crazy and off the rails. And we find that in a lot of cases is still the case with AI, and we're still learning how to harness AI. And
Right.
to give you an example of is from a business development perspective, it's all about the data for us. How do we find new clients? How do we find the person to talk to? If you think about a large building and you think, gosh, that building just opened, new construction, that's a great candidate for a property tax appeal. So I got to, but the problem comes in that that building is probably owned by an LLC. And now you have the issue of I got to figure out who owns the LLC. And then I got to figure out who's the right person to talk to at the company that owns the LLC. And it might be two or three LLCs deep. And that's always been our problem. And that's inherent in the game of property tax appeal business development. So we're really using AI to speed up that process. We're using a lot of different AI tools. And at points in time, there's been a lot of stops and starts with trying to find the right person, trying to find the data. And it's taken us in crazy directions. And then we end up spending a lot of time trying to figure out why I'm on road B when I should be on road A. I want to be calling the CFO of that company, and I'm over here calling the operations assistant in Florida. And so it's managing the AI process and dialing it in.
So you guys are actively then looking for clients. It seems to me like you've been in business for quite some time. I would imagine that in the world of property tax appeal, Paramount is probably one of the biggest companies and well-known names. And I would think that people would just come to you. Listen, I feel like I'm paying way too much for my taxes. I'm going to go talk to Paramount and see if they can figure this out for me. But you're telling me that you go out and you find the clients to bring in. Is that how you're doing it?
Absolutely. Absolutely. We have a very strong direct mail campaign that we use. I can't tell you because it's confidential. We send out, I'll say this, a lot of direct mail. A lot of direct mail. And we actually have right now, we have 4 full-time business development people who do a lot of different things between mass emails, they're on the phone on a regular basis. We hit the conference series very hard. We're continually on a daily basis looking for people, or not people, but buildings, properties, that type of thing. And you would be amazed. Sometimes people they get lulled to sleep. And we have a saying here, and I used it at a conference that I was speaking at a couple weeks ago. And I was surprised at the response that everybody perked up when I said it. I tell people, you wouldn't let the IRS do your income taxes, would you? No, I'm going to do it. I'm going to calculate it. So you wouldn't let the IRS do your income taxes. Why are you letting the county assessor do your property taxes? And that kind of,
Oh, wow.
it's
Yeah.
kind of,
Hit me between the eyes too.
yeah, you're right. Maybe I should look at this, right? And then, oh, doesn't the county assessor do their job and do what they're supposed to? Look, some county assessors, I think, are not great, and some county assessors, the departments are really good. But in San Diego, there are 990,000 parcels in San Diego County, and they have to value all of those, and they don't have the staff to do that. And so a lot of it is automated. And over a period of time, it's not everything can be right. I think the assessor in
Yeah.
San Diego does a great job, but we have a huge amount of business in San Diego because of that situation. But I think a lot of times people get lulled to sleep and they think, oh, the assessor knows what they're doing. I'm not saying the assessor doesn't know what they're doing, but there's a lot of data points that you need to look at. And when people stop in that, they go, oh, yeah. Or they think the process is daunting and it's going to put all this additional work on their plate that they just don't have time for. And that's a misconception. For us, we can get it done relatively quickly. I always tell people, look, I work on a contingency basis. There are no fees to you. The only thing that happens is I bill you if I win. So and I don't bill you until you get a reduction. So it's always it's a cash on cash. It's a no-win situation. It's a great, from a business development perspective, it's a great sales pitch. It's just something that a lot of people just don't know about. It's everybody's heard of property tax appeal, but do you really do it? No, because everybody doesn't know what the process is. It's easy, simple, going down the road. And when you introduce people that way, they go, "Oh yeah, where do I sign up?" That's really what it comes down to.
Do you ever get this pushback that, I don't know, I'd love to save money on my property taxes, but at the end of the day, I feel like we're going to have to pull back the curtain and something else could be exposed. And I don't want to. Is that ever an issue where people are just afraid to move forward because they're going to make themselves even more vulnerable, possibly?
That does come up. And I understand that. I understand that. I can tell you that and it's a bone of contention that we have with the assessors. Now, I will tell you legally, the assessors are bound to confidentiality. In reality, does that work or not? I'm going to give the assessor the benefit of the doubt that they're not running around telling people what is out there. But from a perspective of showing something else that's going to make your assessment increase from $1 million to $1.5 million, I haven't had that happen in 13 years. So
Okay.
it's a valid concern. I get it. A lot of people, a lot of companies are very rightfully so protective of their data. When I worked for the big manufacturing company, we did not disclose one thing to anybody that didn't need it 150%. So it's absolutely a valid concern. I can tell you that from a perspective of confidentiality, it's not going anywhere with us, and our information stays solely with the assessor.
Cool.
So
Cool.
it's a great question. It's a great question and one that
Well,
everybody should ask.
yeah, thanks for answering that. Okay, so in the world of property tax appeal, is there anything that you simply do not trust AI to touch?
I think with any technology, I think you always have to have a human touch associated with it, or you have to accept the shortfalls. And we talked a little bit earlier about how we process, I don't know what the number is, 5,000 valuations or 5,000 cases a year. And one of the things I think I said was, is we pull all of the data in, and if we were to stop and just take that data, that pitch deck as is, and send it to the assessor, there's 15% that I just don't trust or I don't know about. And I'll give you an example. You're in Boise, Idaho, right? Okay, so I'm in California. We all know Santa Monica. If you ever watch a sporting event or anything, they always have pictures of Santa Monica, the beach, and everything like that. Santa Monica has some great scenery, but they also got rent control on all of their buildings there. So if you were to look at multifamily property in Century City, and you were to look at a multifamily property in Santa Monica, which are separated by about, as a crow flies, probably 10, 15 miles, there's a lot of differences that you wouldn't think existed from one side of Boise to the other, because they've all got rent control down there. So I'm going to take and I'm going to let my AI build my valuation case, but I got to stop and I got to look at it for that last 15% to kind of add that human touch and that human knowledge to my case. And that's what sets us apart. We're not completely automated. We're not machine learning completely. We're going to use it for a big chunk to automate the repetitive tasks. But where we're going to be successful is by using our knowledge, our human knowledge, to take that last 15% and turn the dials to where we need them to be.
Interesting. Yeah, so there's even with all the automation and the technology that we have, there's still that amount of human touch that's important. Because I say this over and over again, AI is super. Don't get me wrong. I love it. But it's not perfect and it makes mistakes. And business is conducted face to face, human to human. And I don't think AI is ever going to replace that.
I think that's 100% perfect statement. And I think that on a big picture basis, whether it's property tax appeal, the niche of property tax appeal, whether it's real estate in general, or whether it's manufacturing. To think that AI is going to 100% replace everything, I think is wrong. I think that humans will adapt, and there will always be a human element to a lot of things, especially things like, for us, the last step in a process, you build a valuation, send it to the assessor, you have a negotiation. The last step to the process is we actually have to go and put on our case in front of the assessment appeals board. And looks like a little mini trial, if you will. We get to play junior lawyer on a regular basis. Yeah, and our ability, and one of the things that we pride ourselves on, is our ability to put cases on and fight heck for our clients at that point in time. AI is never going to replace that. It's never going to replace our ability to, I guess it could. It's never going to replace us as people who can go in and argue in an open public forum for an additional $2 million off of a building. You know what I mean? I said, that's never going to go away. So I think we hear all of this on a daily basis, and I'm sure you read it. I do. AI is eliminating jobs. Look, AI is going to eliminate it. It's going to change the way a lot of things do. A lot of people do things, but it's never going to go away. And I truly think that humans in general are going to adapt to it. It might be painful, but we're going to adapt to it.
I would agree with you 100%. So let's fast forward 10 years from now. What do you think the property tax appeal industry looks like with the onset of AI today? Where are we going to be in 10 years?
I think the process will be faster. I think the process will be faster. It's faster now than it was a year ago because of the advent of AI. We talked about, how do we build our cases? I can now build 10 when I used to build 2. I think that we'll all have better data. And when I say all of us, that's property owners, property tax appeal agents, assessors. I think we'll all have better data. We'll have better data to do our jobs. And I think that will make all of us more efficient over a period of time. It will not make the property tax appeal process go away, because you're always going to have that element. You're always going to have geopolitical factors that affect valuations. We'll simply be able to do more with less manpower, if you will. I really think that's where we will. So I think the assessors, as a general rule, will have more data at their disposals. And hopefully we can cut government spending and they can do it with less of a staff. I'm just kidding. Taxpayer advocate, okay? And we'll all be in a place where we have more information at our fingertips. You think about now, as a real estate professional, you think about the amount of data you have at your fingertips to help your clients. It's infinitely more than it was 5 years ago, than it was 10 years ago. Your listings are instantaneous. Comps are instantaneous. And I think that will hold true in the property tax appeal arena.
Nice. Okay, I've got 2 more questions for you.
Sure.
And then we're going to thank you for your time. You've been very generous today, and it's been great to learn a little bit more about Paramount and the world of property tax appeal. What would be your advice to someone considering getting into the industry of property tax appeal?
My advice would be is to look for a firm that is going to help you increase your knowledge. In other words, if you're a valuation person, okay, let's build your skill set. So I'm going to teach you how to build a valuation. I'm going to teach you how to build a valuation for office properties. I'm going to teach you how to build a valuation for multifamily, for industrial, for new construction. I'm going to teach you a number of different skill sets across there. And then I'm going to teach you some additional skills, which are very hard to get. I'm going to teach you how to put a case on. We talked about putting a case on in front of the Assessment Appeals Board. There's an art to that. So I'm going to teach you how to do that. I would look for a firm that has been in business for quite a while, is very ethical, that is growing, that's strong, and is super aggressive, and is going to help you increase your skill set and increase your market value down the road. I think those are all things that I would look out for any job. Who's going to help you increase that? Lastly, I look at the corporate culture. That's always important. I spent some time, I didn't touch on it, as a vice president of a Fortune 500 recruiting company and handled the whole West Coast. I always told people, you got to be fulfilled when you go to work. Money is nice, but money's not everything. Look at the corporate culture, and do you fit into the corporate culture and would you be happy there?
Maybe a company like Paramount, as a, for instance. All
We
right.
like our corporate culture. I've been here, a lot of us have been here for a long time, and that's a testament to our owner, Wes Nichols.
Awesome. Okay, here's the last question. Is there anything you want to say that we haven't touched on so far? Is there anything else that you would like to share?
The last thing I would like to share, and we've kind of skirted around it a little bit, there are so many different ways to reduce your property taxes. And really, I always encourage people who have that as part of their bottom line. I'm a CPA by trade, and I was a controller by trade, and my job was always to protect and increase the bottom line. And what we do directly helps people increase the bottom line. And that could be go all the way down to a single family residence taxpayer. You want to control how much you put in your savings at the end of the year. So really, I would encourage people to look at the data points associated with property tax appeals. We didn't talk too much about cap rates, but cap rates directly affect the value of the properties. Look at your market cap rates. Think about if you have a multifamily residential property, if you look down, if in the mark or in the area, the vacancy rates, an average vacancy rate is 5%, but for some reason yours are at 20, you're outside of market rates. Same thing with our expenses. When we're looking at expenses, let's assume everybody talks on a daily basis about how much insurance costs. Insurance costs are absolutely through the roof, and we know that. But let's assume you've had some issues that happen and your interest rates have doubled. So your expenses are going to be much higher than what are market rates. Those are all data points that will affect the value of your property that the assessor is probably not taking into account. And so you should be looking at those on a regular basis and saying, hey, is property tax something I should be doing? Is something that I should be looking into? Like you said, when people come to you, yeah, we do get people to call us and say, I think I'm overpaying. Reach out to somebody, because I can tell you that, as we've talked about, there are a number of property tax appeal firms out there, and most of us work on a contingency basis. So it's something you can do to increase your bottom line, or if you're a single family residence, more money in your kids' college fund at the end of the year. Is you should absolutely be looking at it. Doesn't take very long, doesn't add a whole lot of work to your plate if you send it out. And it's an easy way to increase your bottom line and save cash. And everybody, one thing I learned when I got out of public accounting and I wanted to be a controller, my CFO always tells us, cash is king. And the more cash you can save, the better off you are.
Okay, those are great words to end on. Ladies and gentlemen, Rob Burden is my guest today, and what an interesting conversation. It's a whole world that I really know nothing about. So I appreciate you educating me and our viewers. And it was a real pleasure. And I thank you for your time, sir.
I appreciated it. I had fun. I had a good time doing it. So anytime you need us to come back, you need a panel or something, I'd love to do this. We do this stuff on a regular basis. You can tell I like to talk. Anytime you need me to come back, I'd be more than happy to join you.
All right. We appreciate you, Rob. Thank you. Goodbye, everybody. We'll see you on the next one.